Hi, welcome to the Market Alert for Thursday, the 7th of November 2019. So EU considers launching its own version of Bitcoin. Now, this will be an interesting one, given the amount of debt that they've got in Europe. So let's see how this one plays out going down the line. But that's the latest Bitcoin news. As for the actual underlying market, you can see there from the 4-hour chart, this market remains sideways and still really tight and coiling here. This, as I said in yesterday's alert, this coiling effect, you will see the market explode at some point, and it will be when you least expect it as well, a bit like this over here when the market took off a few weeks ago. So be warned. That's what's likely to happen there. And you can see this in the daily chart as well. The good news is the market remains above the 200 bar moving average at the moment. This is holding really well, and hopefully the market will break out to the upside. If not, then obviously we'll get a retest to the downside, but that's how it's looking at the moment. But very sideways and patchy as you look at the internals of this market at the moment, not doing a lot at all. However, the stock market, bonds and bullion bid as trade deal delays stall stocks. We saw this yesterday, and as I said in the market alert, and the only thing that was going to move the markets yesterday would be anything to do with the trade deal, whether it's happening or not happening. And we saw this in the Dow yesterday. We'll start off with the daily chart. The market still trying to move to the upside. So we've got lower highs here. Let me just bring this down a bit so I can draw some arrows on it. So you can see that we've got a lower high for yesterday, but I wouldn't be at all surprised to see the market move back to the upside at the moment. They're doing absolutely anything they can to bring the market back to the upside. The DAX is heading towards, is actually at all-time highs, I think. No, it isn't. It's heading back towards the all-time highs. I was just thinking of other stock markets that I've looked at. But certainly the Dow is going to attempt to move higher. But notice how narrow the range of the bars are, not too dissimilar to what's going on in Bitcoin there, the volatility dropping. And we can see that from the implied volatility chart as well, a very tight range down here of the implied volatility, barely moving. I'm hoping this is correct. As you saw in a previous market alert, iVolatility have updated their website. It seems to be updating the price. I found a way through the back door to the old link to have a look at these prices and maintain them, and you can still see that we're more or less in that area. I'm just hoping they haven't changed the formula and I'm missing something here, but it looks about right when you consider what's going on with the price. Is very quiet, so it would reflect this. So yeah, yesterday, of course, as the market was trading, I did a trade back to the DP level after the market sold off, because that's what this market likes to do. It likes to move back to the upside. And then as I was sitting and watching, all of a sudden the market exploded. So I went on a search, and sure enough, it was to do with the China trade deal. And here you can see the article that was released earlier on in the day, just after the market shot down. US equity futures suddenly tumbled after Reuters reports that the signing of the US-China trade deal could be delayed until December, as terms of the venue remain unclear. So, like I say, that's anything that's keeping this market up at the moment, although it did struggle a bit yesterday. After the market consolidated, we got the classic retracement, the market then making its way back to more or less where it was before this news hit the wire. 76% retracement, and the market then coming back below the 200 bar moving average as well, you can see there, and the DP level. So the DP and the 200 bar average becoming a resistance level, and then off into the overnight markets. This has been the case until there you can see prices now heading back to the 200 bar and DP level, and no doubt will probably work their way back to the upside there. Okay, just to finish off, we've got the 10-year down a bit yesterday, but still showing that the market is heading for a recession, as the inversion of the yield curve between the 3 and the 10-year is no longer there. And Deutsche Bank, I think, is still being funded on the repo market, judging by the fact that it's still above the 200 MA. Did see an article yesterday, which I haven't read yet, about saving Deutsche Bank and refinancing the Eurozone. I'll see if I can find that later this morning after the markets have calmed down a bit. And finally, let's just have a quick look at what news we've got moving the markets today. So we've got quite a bit here. Good job I had a thought there about it. So we've got EU economic forecasts and Bank of England monetary policy report 10 a.m. and midday. And then we've got also MPC official bank rate. That's not going to alter. Interest rates aren't going up in this country anytime soon. Barmy Khan is out at 12:30 as well. And I suppose next week Lagarde will be out for her first European one as well. So, a bit of interest rate news out today. Normally this would be major, but of course, as we all know, it's not going to we're not going to see rates increase ever again, I think, in my opinion. Certainly, unless something happens in the financial system and in the bond market where they have to. Otherwise, there's absolutely no chance of increasing interest rates. Not a cat in hell's chance of that happening. Okay, that will do it for this one. If there is anything else to report, I'll let you know. But otherwise, as ever, thanks for watching. See you in the next one.